Good morning, everybody. It's Brian. Hope you're doing well today. It's Wednesday. Wednesday? Thursday? I don't know what day it is. I think it's Thursday. Thursday, the 13th of August. Here to do just a quick morning update. Gonna run through the numbers, have a look at what we're seeing over here on the forex side of things, and then jump over to futures, and then let you guys get on and do your own trading process from there. So kicking things off this morning, I'm sure you've already gone and looked at news, see what's going on for the day, see what's happening, figure out if there's anything that is potentially impactful that we should be aware of, so that we don't trade right into the face of something going on in news. Of course, if you're doing that, you see that we've got unemployment claims coming up here in the U.S. at 7:30. So obviously that's before the start of the regular trading session for the most futures markets, but that would be impactful for those that are trading in foreign exchange. So even though it's not listed as a high impact report, it's a medium impact. It doesn't typically have the same, I don't want to say impact again because I've already said it like 3 times, but the same power that like a non-farm payroll report would have when we talk about unemployment numbers and unemployment claims and new jobs and so on and so forth. But this will be could potentially be impactful. We've got a lot going on that could be a potential driver. I think there's still a lot of nervousness out there across markets around this current V-shaped recovery, and obviously increasing unemployment could mean a few things. Of course, it could be good because that might push more urgency on getting some sort of resolution to the current relief bill that's out there. I think the market's kind of waiting on that right now. So anyway, long and short of all that is just we've got news coming up. Be aware that the news is coming up. Don't trade into the face of news. You don't really need to know much more than that. What the news comes out as, your interpretation of it, my interpretation of it, Bob's interpretation of it, Susan's interpretation of it, doesn't really matter. What matters is how the market reacts to it, and that's what we want to take advantage of. Is we kind of avoid the news hit itself, look beyond the news 5-10 minutes after news, when spreads go from this back down to where they typically should be, and the market begins to normalize, and then we see some directionality take place post news with how the actual market is digesting that and what's happening with buying and selling. That's when we want to go back in. Trying to front run it, trying to refresh immediately when the news occurs and see what it says so that we can take some sort of an action is kind of futile, because again, our interpretation of it is irrelevant. We care about how the market interprets it and how the larger market is actually moving in relationship to that. That's all that matters. I can have an opinion, like we've said before, for many days on end now. We all have opinions around what the market's going to do, but we need to put our opinion aside when it comes to trading and trade what's on the charts and trade what our system tells us to trade. Right? Don't just trade our opinion, because when we trade our opinions, we get attached to things that creates a lot of other emotional triggers that cause us to do things in the marketplace that typically aren't in our best interest. So anyway, I've spent like 4 minutes talking about that. Don't need to go into any more detail. Let's just leave it there. What that will impact, though, is the early morning breakout trade that we would take at the start of the U.S. session in the forex market. Even though it's medium impact, the rule is high impact, but I'm paying a lot more attention lately around unemployment here in medium impact reports, simply because they have had an impact. So I would choose to err on the side of caution, let it step back, let it do its thing, and then roll from there. Even though it's a USD report, and what I'm really watching coming into the new session is the Canadian versus the yen. We've got the CAD that's been fairly flat, the yen that's been kind of flat, but then over the last couple hours has started to really push away from the midpoint. So we're seeing nice divergence between the CAD and the yen. And as we look at that on an individual chart over here, we can see that the CAD yen, it's moved about 40 pips, and its averages around 70. Yesterday it had a pretty big day. It moved 90 pips yesterday, but averages around 70. And we've got a shorter term upward trend here. So, being able to buy the CAD against the yen on a breakout of this would be great. But I'd rather wait for the news. Even though it's US news, that will impact both the CAD and it will impact the yen. Especially the USD and the yen are very closely correlated. So anything that happens with the USD could have especially if there's some sort of a major variance from the expectation, we could really see a move in the USD, which would probably affect the yen, which would then, just by causality, affect the CAD yen over here. So again, better to be on the side of caution and just let things happen with the news and then see where we are, reassess at that point and see what the entry process looks like. But looking through the available pairs that we could potentially trade, this is the one that stood out. I mean, it's again 40 pips on an average of about 70. There's some others out there, the euro versus the pound. Although, they're on the currency strength index over here, the currency strength meter over here, they're trading right together. But that's only moved 23 pips for the day, and its average is around 60. So also with this same thing, if one of these during the U.S. session, which would be towards the end of the European session, into the London session, if we see a big sell-off on one of them coming into the end of the session, that could be an opportunity to take an action there on something that hasn't moved very much. Now, it's not a very high volatility currency pairing, so don't expect a whole lot from it. It'd be more of like a scalp trade to get in and get out. If you see that divergence, if you see something actually happening where these currencies that have been moving directly with one another really start to push away, that would be an opportunity to get in and take an action there. Nothing else really is standing out. I mean, there's a couple others. New Zealand USD. I'm not a fan of New Zealand trades. Take it for what it will. I mean, it's a volatile. The New Zealand's fairly volatile, but it's because it's low volume. Beyond that, I don't really see any other. US CAD potentially. I mean, it's moved 47 pips on an average of about 80. That could be something there as well. But again, need to wait for news to happen. So a couple trades there. CAD yen has my most attention, and we'll see what happens as the news occurs on that one. All right, so switching gears, moving over to the futures market. Big day yesterday. We moved on and moved through that previous high to create new highs. So the S&P, we said yesterday, watching 3360 as a potential breakout for a long entry. It broke through there and just cruised on up to new highs off of that 3360. So today, same process. We're in a bias to the buy side. 4-hour bias is long, 30-minute bias is long, so we'd be looking for long trading opportunities. What does that look like to us? Well, pullbacks, back down to retest this key level of 3360 down to maybe even 3350 would be a pullback area to buy off of a pullback there, and see what that does for us. If you're looking for a breakout, this 3370, which is really tight for right now, but that 3370 could be a potential breakout spot to see if we can go higher from there. I would prefer to look at potential pullbacks off of this. Of course, if you're contrarian, you're looking for reversals, this 3379, 3380, is holding up over here. So, pushing back to this high area, 3380, look to reverse off of it. So remember though, as I say over and over and over, I know I sound like a broken record, if you're trading against the trend, if you're contrarian, I want you to consider you're stepping in front of a train. The train is moving in a certain direction. It's heavy and it's hard to stop, and there's a lot of momentum behind it. And you're going to stand in front of that train. You've got to have a pretty good reason for getting in front of the train at whatever point you're getting in front of it, right? You need to have a plan for what that is. And it could be the plan is, hey, the train has very often come to this spot and stopped and then started backing up, for whatever reason. But remember, every day is different from the last, and all the drivers around every day are different from the last. There's every day is unique, right? So just because it's come to that point and stopped before doesn't mean it'll stop again. It might have a high probability if it keeps coming to that point and stopping. Yeah, there's a fairly high probability that it might do it again. But like we talk about with trading all the time, it might not. So have a plan to get out of the way. The train doesn't stop, get out of the way. You know, maybe you lose a bag or two, but at least you don't get run over, right? And you got your suitcase and you got your backpack and you're jumping in front of the train and you got to jump off and you lose your backpack. It's better than losing everything. So if you're being contrarian, 3380, look for reversals there, but have a plan to get out if it keeps trucking on. Because I mean, it breaks 3380, very possible to see 3400 today, maybe even a little bit beyond. It's madness if you ask my personal opinion, but our personal opinion and the trading process should be separate. They're in separate rooms, right? So we'll see what happens there. So, but long and short of it is the bias is to the buy side. So we'd continue to look for buying opportunities. Buying opportunities can be pullbacks, which would be 3360, 3350 for a pullback to buy off of. You could look for breaks of 3370 right now. See if we break through that, it continues on. I would look to take profits around 3400 just as an idea. Whole number, never seen that high of a level before. 3400 just because it is a whole number will probably trigger some things, which probably trigger some sells. So might be some opportunity there. But we'll see what the day brings. Crude, popping over here. Crude is interesting. It's still in that upward bias. So the 4-hour bias is long, 30-minute bias is long. So that means we would continue to look for buying opportunities. Pullbacks, so we could look for pullbacks down to 4240 area, breakouts above 4280 over here on crude. It's in a channel, 30 minutes in a channel. We look at this. So, you could almost draw lines and just bracket an order in. You can buy if you break above, probably go up here above 42.8, and you could sell if you broke down through here if you wanted to bracket an order in on it. But the bias is long, so if you're strictly trading with the trend, you'd look for buying opportunities, and that's that can come in the form of a breakout or a pullback. So the buying opportunity, if you're looking for a buy opportunity, the potential way to trade that would be a breakout. So looking above 42.80, you could probably go as low as 42.75, but looking above a break of a certain area to buy, or you can pull back, like I said, back down to 42.40, 42.50 as a pullback, and buy off of that would be the trading idea for crude. The indicator is in a crude trade. Took one yesterday. It took a crude trade over here at 8:30 in the morning, so right as the regular trading hours began. Looked like it was going to get stopped out, pulled all the way back here, and now it's into profit, and just barely. It's been hanging right around that entry point. But so we'll see, if that can continue to push on through here. I've just got a static stop loss and take profit, and I'm not using any kind of a trailer on crude. It's worked out a little bit better over time, over history, to just have that 2-to-1 risk reward as a static versus a dynamic stop loss that's moving on, ratcheting on all the time, mainly because of the volatility of crude. We get a lot of spikes up and down on crude, and so it's worked out better to not trail that stop. Although, in something like this, if this had been a live trade coming into today, I'd probably ratchet off that risk and just move it to break even plus 1 or 2, just to shore it up, since it seems to be struggling at that point. And we've got that long, as we've just shown over here. We've got that long. I say long. For the entire morning. Bit of a channel that's been developing here. So we get into that channel, that can be a big decision point, kind of how it plays within that channel. If it breaks through it, then we continue on. But it could also pull back and push back down lower. So anyway, on gold's an interesting little bear today. Gold has flipped over on the 4-hour to a short bias. Excuse me. And on the 30-minute, it's a short bias as well. Man, I have trouble wanting to short gold. I really do. But it is at a short bias right now. So with that said, we'd be looking to short gold on this. And what does that mean to us? Well, it means if it pulls back, so if it pushes up here to this 1960, 1950 area over here, we'd look to short off of that. Breakouts would be down below 1920. If it pushes below 1920, we could look to see if it could push lower. I wouldn't look for a whole lot to the low side on gold, personally, but trade it how you will. But I would look at that 1900, 1875 as a profit point if it did push that low. So don't get greedy to the low side on gold would be my idea on that one. So anyway, the trend, the bias, I should say, the trend is actually different from the bias, but the bias right now, the 4-hour bias is short, 30-minute bias is short, so those are in agreement. So we'd be looking for potential short opportunities. Again, if you're like me and you're having trouble wanting to short gold, you could be contrarian to that and say, if this thing pulls back to 1900 again, I'm loading up at 1900. That would be but have a plan. If it pushes down, how low are you willing to let it go before you get out of that trade? But anyway, those would be the ideas around that. So there you have it, and I'll leave it there. Don't really have any new trades to talk about, so we'll wait for those, see how they work out, see how things are rolling for the day. You guys should be able to click and enroll in the indicator strategy, whatever you want to call it, on TradingView. So there's a link in the members area for that, so you should be able to have that and get to it. It'll have you add some information about your TradingView ID so that I can give you access to it. But then that's it from there. So should be good to go. So if you guys have any questions, let me know. You can shoot me a message on Facebook. You can shoot me an email, either one. I'm here to help. Have a great day. If we have a setup based on that trading plan that we've talked about in class a few times, with the pullback, looking at the bias, waiting for a pullback, and then entering on the close of the previously closed lower high or lower low if it's an upward trend. If we have one of those trades, we'll talk about it. So otherwise, be patient. There's been a lot of sitting on our hands the last few weeks, and that's good. It's okay to sit on your hands. It's okay to not trade every day. It's okay to not put money at risk just to put it at risk. You don't have to click the button every day and gamble. We want to take the best setups. It's not gambling. It's trading. And I know a lot of there's triggers in the brain that make it very similar, but at the same time, I both can have a plan. I actually know some people that do very well counting cards, playing blackjack. They have a plan, they have a system, they have a method, they do well with it when they can execute that plan. Same thing here in trading, though. We've got to execute the plan, stick to the plan, and that's what gets us over that hump in the long term. Putting money at risk every single day just to put it at risk is counterproductive. It's that Kenny Rogers song, right? Know when to hold them. That's what we're doing right now. We need to know when to hold them. And holding is a good thing right now. So if it doesn't meet your plan, don't force it. Wait for it. All right? So that's it. Have a great day.